Hello, everyone. Sorry about the delay. I was trying to read through some stuff. I don't know if this is being recorded on all of our other media streams or not, and it was kind of messing me up there trying to read through that and see whether or not indeed it was being recorded and hosted on all of those sites like you guys are used to being able to watch it for those that watch on replay. So hopefully it is live. Sorry about the 30 seconds of dead air and just staring at my face. Sorry about that. But I was trying to make sure that I was doing everything right since this was something new that had popped up. So glad to have you with us today. So whether you are live with us or hopefully watching one of these replays in case you missed it, um, today we're going to be talking about long-term investing. So several weeks ago, we talked about the volatility of the market and what we were seeing in the month of March and how the market was just moving. Big swings, even intraday, major swings. We talked a little bit about what day trading is, how you can kind of think through that, what some of the pros and cons are. And then last week, we talked about what's commonly referred to as swing trading, which is essentially what Tradeway teaches in the sense that we're trying to catch pivot moves. So stock, or market was going down, now it's going up, trying to catch those general movements from up to down, up to down. Generally, plays would last a couple of days to a couple of weeks, that kind of thing. But today we're going to move into that next phase, which ironically enough is probably basically us going in reverse from the way that most people really look at trading. They would have a general long-term buy and hold mindset. Then if they were to go to one of our classes, they might have a swing trading mindset. And then as they get more familiar with the whole process, they might kind of start to dabble a little bit with day trading. So we were actually kind of going in reverse here a little bit, which is fine. But today I wanted to talk a little bit about the pros and cons of long-term investing. Now, you don't hear us here at Tradeway talk a lot about long-term investing. So why is that? Well, one, if you're in a long-term investment, the very phrase itself indicates that, this isn't really like a quick money making opportunity. This is something where your money is going to be stashed away for a long period of time. And that's generally the case, right? So for most people, let's just say they are somebody who's interested in the market but has really no knowledge, really no skill sets, then essentially this is what they're going to be. They're going to be a long-term investor, commonly referred to as buy and holders. Now, is buying and holding bad? Let's just start off with that. Well, no, not necessarily. Can buying and holding be good? Can be. All right. It can be quite lucrative. Okay, so why? What is the point of this? So buy and hold simply means ideally that you're going to buy a stock at a lower value, and then somewhere in time you're going to sell that stock, and in theory, maybe even have a large profit from buying and holding this thing. So what's the downside or the hang up here to buying and holding to long-term investing? It's simply that most people really have no clue of when they're actually going to sell. And so whether you owned a house, whether you owned a car, whether you owned a stock, whether you owned a piece of dirt, doesn't matter. If you're going to sell that thing, you have to sell it for a higher price than your original purchase price. And you don't make any money on it until you actually close the trade. So until you actually sell that thing, so again, dirt, house, car, stock, whatever, you're not going to make any money on it until you actually close that position. So the issue that most people have with buying and holding is that they simply just have no real plan or idea as to when they would actually sell that stock. So am I going to hold it for a couple of weeks? Am I going to hold it for a couple of months? Am I going to hold it for several years? Am I going to hold this thing for decades? Am I going to pass it on to my kids? So they may have a price point in mind. Well, if I bought the stock at $5, if it gets to 100, or some number, some random number, they just kind of throwing out there and just kind of making it up as they kind of go along, saying, well, if it hits this price, then I'll sell it then. But what if it gets to 99.99? Well, no, it didn't hit my price. So then they hang on to it, and it drops who knows how far, and they're just still in it, and they're like, well, it didn't hit my price. So they don't really have a plan in mind. So a buy and holder doesn't really have a plan. Their plan is just to kind of buy a stock and then, at some random time sell it later and then hopefully make a profit. Well, it's not really a plan. So the problem with the buy and holders is, since they aren't really educated and they don't have a charting system, they don't really understand where a target price might be. They're just going to buy, and then they have a tendency to hold for a really long time because they kind of believe, well, you can't really time the market. You can't really know which direction the market's going to go, when it's going to go up and down. So since you can't know those things, well, of course, they just, buy and hold. That means they're there for the ups and the downs and the ups and the downs and the ups and the downs. And they're just kind of riding this roller coaster for as long as they desire. So what I thought we might do today, now that we kind of talked about some pros and cons, is kind of look at two stocks that will illustrate this for us. And keep in mind that what we're going to do is we're going to actually look at these from a weekly view. So when you're looking at this chart, essentially we're looking at it from a weekly view, which means that every candlestick represented here is 1 week of time. Now, if you're swing trading, all right, you're going to be looking at daily candlesticks because those, daily moves are going to be quicker, right? And so, the destination is going to be reached quicker too, as you go from support to resistance. But with long-term investing, you may look at your stock every day, but it doesn't really make any sense, right? Because why? It's not like you're going to sell it. You don't have a plan to sell it just yet. So we're not even really going to look at it in this example, except for like a week. Where is it at the end of a week? And in fact, if we wanted to, we can go out into months and just look at monthly charts, because the reality is, if you don't have a plan of where you're going to sell, or it's just some kind of theoretical, if it reaches this point kind of plan, then you're just going to wait until it reaches that. Now, the other thing that you would have to decide is, how low would I let it fall? Right. And so we're going to kind of look at two of those. So we'll look at one where we see the benefits of this and how a stock can move up over time. And really, if we're committed to a long-term investing, I mean, what we're going to see here is that we could be in this stock for a few months. We could be in this stock for a few years. And we'll just go in there and look at that. And as you guys see that, I think you'll begin to understand a little bit more of why, the potential for buy and hold is actually good, but I still have to have a plan to sell. And so as we look at these examples, I think it'll make sense to you. So the first one that we're going to look at here is ENTG. It's Integris. They're semiconductor equipment and materials. I got it set to a weekly basis. And basically, we're back here, I think, in 2018. So let's just say that you thought, what, this stock is at support. I'm going to buy this stock. You look at it and just say, well, even in its recent history, 6 months ago, it was at $37. So I think somewhere over the next several months, this thing is going to go back to $37. Or maybe you say, you know what, I'm going to stay in this trade till it hits $100. I'm going to be buying it at like 25. If I could triple my money, 300% return on investment, I would gladly take that. Of course, all of us would. Okay. So we'll assume for now that you got about $25,000 that you're willing to invest in this trade. And what I'm going to do right now is just kind of hit my bracket key to the right. And we're just going to kind of quickly go through this and just see what this would look like. Well, the very next week, after you got in, this stock exploded. So it went from 25 to 29 in just 1 week. So you've already made, if you sell, okay. Now, again, you have no plans to sell because you're going to be in this thing till it hits 37, maybe 50, maybe 100. So you're not going to sell. But just in this 1 week alone, because you got a really incredible buy point right here at support, you could take this off the table and make about, $5 a share, which would be about a 25% return on investment, which in and of itself would be a fantastic trade. But that's not really what we're doing here, right? We're not doing the swing trading. So we're just kind of in this for the longer haul. So let's just kind of see what it does. Yeah, so we've got a few weeks here where it kind of floats sideways. It doesn't really move much at all. Now we start to get above the EMAs. Now we're starting to climb. So remember, our first thought was maybe around 37, 38. And we're getting pretty close to that now. Oh, there it was. There's our 40. Now it hit it and it dropped, right? But it's already gone from 25 to 40. And this has all happened in the context of like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, about 10 weeks. Okay, 10 weeks. You gotta stay through those drops. See, but now look at that climb. There we go. Oops, that's gonna be harder. So those 2 weeks are hard. Oh no, look at that. We're losing, we're losing by so now you got to kind of struggle with, oh, I could have sold at 40, but I didn't, and now it's back down to 35. Okay, so again, that's why you're not really, if you're going to be a long-term buy and hold or investor, you don't really need to look at it longer term because you're just really trying to ride the wave. You think, hey, the market is going up in general, and I'm going to ride this long-term wave as long as it can go. And now you can see we're hitting new highs here, 42. So we're on our way to 50, right? So 50 was going to double our money. Let's see, we're about to get really close. Let's see, there it is. There it is right there. We got it. All right. So now we've been in this trade for, let's see, 3, 6, 9, about 10 months. 10 months, and we have doubled our money. Now, this is up to you at this point. Do you say, well, I've doubled my money, I've been in this trade, I've kind of let it do its thing? Or do you just simply say, all right, I'm just going to ride this thing out. I'm really going to ride this thing out, because as much as I would like to say I've doubled my money in 10 months, and I went from 25,000 to 50,000, I think this stock has more to go, and I'm willing to stay in it for another year or two if I have to. And maybe your thought is there's no way a real new bear market is coming. Uh, we'll see what happens in 2020. But that's your thought. Like, hey, I'm just going to ride this thing out. So let's just see what it does here for a bit. We got up to 50. Oh, how are we going to get? Oh, 60. Oh, almost 60. All right. Now remember what happens in 2020. All right. We're going to get our COVID bear market, right? Okay. So you went from 25. I think we hit a high of about 50, 59, 59. Wow. So that was really nice. But remember, a buy and holder is going to ride this thing out. So, whoa, that hurts, right? That hurts. March is going to hurt us. Oof. So we went from seeing our stock at almost $60 to 40. Now we still bought at 25. So because we had a phenomenal buy point, we're still in good shape here. But that bear market, that's starting to hurt a little bit. Now the good thing is this bear market doesn't last too long. We didn't know that at the time, because historically bear markets could last for months. Recently, they've only lasted for a few weeks or a couple of months at most. So they've been over very quickly. So they've been a really steep drop, but also a really steep recovery. So if we really do think, okay, this market is going to recover, we can ride this thing out. Oh, wow. It looks like that's a good choice. Now watch this. We're going to ride it out. Just ride it out, ride it out, ride it out. Oh, 70. We got to 70. Ooh, 80, 90. 100. All right, look at that. 100 right back here. So at this point, guys, if you said, all right, my target is 100, you would have to now then decide, are you going to sell at 100, right? So you kind of had this pie in the sky, like I'm going to buy this stock at 25 and sell it at 100. Well, now you had a chance. Your stock hit $100. Now, after you sell, it's done, but you made 75 bucks a share. That was $75,000. Now you got to figure out, what am I going to do if the stock continues to go up and goes up as high as 150? That's 50 more dollars a share. You could have made $100,000 on this trade in a little over 2 years, but you settled for 75,000. Now, guys, understand, settling for $75,000. Okay, nobody's going to be really upset about that. But the reality is, and the problem with the semi buy and holder or the long-term buy and holder, is that they don't really want to sell because they're afraid that this right here would happen, that they sell at 100 only to see it go to 150. And so because they're so afraid that it might go to 150, they never want to sell. What's the danger of that? Okay, so let's go back now and we'll see the danger of that mindset to say, okay, I bought it, but we'll go back to the same time period here, right? So let's just say we did this one instead. We're going to jump over here to shop this time. Now, this time, same date here. We're going to go enter Shopify. Now, this is a much higher stock. It's like 125. But let's kind of see what happens with this one. We'll play it out kind of quickly here. Oh man, making some really nice moves. 125 to 150 in just 2 weeks. All right, it's flying. 175 in a little over a month. Wow, this thing is flying. 200, here we come. There it is. 200. Yes. Yes. All right. 225. We got you. Oh, 250. 300? Yep, yep. Anybody 300? Yes, 300. Wow, wow. We bought this thing at 125. It's worth 300. All right, so let's go. Let's go. 350. Here we come. 350. Anybody? 350. Yes, 350. 400. Yes, 400. Uh-oh. Uh-oh. 400. Well, I went from 400 to 325 real quick. Ooh, 300. Wow, that was $100 a share in a month. Uh-oh. Well, you know what? I got to ride it out, right? I mean, I've got to ride it out. I don't really have a plan to sell. So I ride it out. Okay, there we are. 400 again. All right, 500. Yes, 600. What? Oh, that was quick. Oh, 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 600 again. 700. Yes, 700. 800. Yes. 1,000. Let's go. When it gets to 1,000, guys, we're going to sell, right? Everybody agrees it gets to 1,000, we're going to sell it. Yes. All right. There it is. Wait, Jeffrey, I don't want to sell at 1,000 because what if this thing goes to like 1,250? Well, I don't want to sell at 1,000 if I can make an extra 200. That'd be $1,000 a share, Jeffrey. I'll sell at 1,250. If I can make $1,000 a share, I will sell. All right, let's go. Let's do it. Let's do it. Let's do it. Oh, we did it. We had a shot. Now you're at 1,250 and you're like, all right, I was going to do it, but I couldn't, Jeffrey. I just couldn't because now I was thinking, man, it's at 1,250. It's just going to go to like 2,000. So now I'm going to wait till like 1,500 or 2,000 and then I'll sell. Right. Then I'm going to sell. But as soon as it gets like 1,500 or 2,000, oh, there's 1,500. Oh, no, 1,49975. It was so close. So close. So it's no problem. It's going to go up. It's going to go up because I'll just hold it and I'll just see. Because watch this. It's gonna. It's gonna. It's gonna. It's gonna. Oh, there we go. 1485. There it was 1,500. I got another shot to sell, but I don't want to sell now because now it's going to go to 2,000. All right, so I don't want to sell yet. Look at this. It's gonna get. It's got it. I'm just gonna wait. I'm just gonna wait it out because it's gonna go to 2,000. Look, there's 1,750. Oh yeah, 1,750. 2,000. Here we go. Next run up. Next run up. It's gonna be next run. Next run. Next. What happened? What happened, guys? Listen. All of a sudden, okay, we kept making these ideas. Oh, I'm going to sell here. 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 We went from 125 to as high as 1,750, but we made no money because why? We haven't sold. And then we'll look what happened. It dropped and 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 it dropped. And we went all the way from 1,750 to $500. Guys, listen, you still bought it at 125. Okay, you're still up $375 a share. That's still incredible. That's a 300% return on investment. But I bet, right? Pretty sure, pretty confident that you're going to be missing out on that 1,750. Why? Because the issue, the downside to long-term investing is that if you don't have a plan and you don't actually sell, everything you have is unrealized gain. It's profit you could make, but not profit you have. Why? Because you only make profit when you sell. And the problem with the long-term investor is if they ever get caught in a stock like this, where it's had that kind of rise, they've ridden it out. And so they continue to ride it out, even if it falls, even if it falls. And I've seen stocks that were as high as $1,000 drop down to $20 a share. Can you imagine that? Having the chance to sell at 1,000 and still owning that thing when it's at $20? That'd be rough. That'd be rough. There's a lot of regret in that, isn't it? So listen, guys, long-term investing can be worthwhile. We've looked at two extraordinary examples here where if you would have bought and held, you could have made a lot of money. But at some point, you can't just be a buy and holder. You have to be a seller. So long-term investing can be good, but you got to have a plan and you got to execute your plan. The issue with most people that are buy and holders is that they're true to their name. They buy and they hold. Notice we don't call them buy, hold, and sellers. We call them buy and holders because they have no real plan to sell. And because of that, sometimes they ride things out and they ride them out to such an extent that they ride them simply too long. Right. And if this stock continues to drop, I don't know that it will, but if it did and it dropped all the way back down to 175 or even lower, they could go from the potential to make over $1,000 a share, almost $1,600 a share, to potentially having an expense and losing money on this trade. How wild and crazy is that? Well, guys, that's Tip Tuesday today. Thanks for being with us. It was kind of a wild ride, wasn't it? So I hope you guys enjoyed this. I hope it gets posted up on all those sites because it was a really good walk through the pros and sometimes the cons of truly buying and holding with no real plan to sell. Thanks for being with us for another edition of Tip Tuesday. We'll see you guys next week.